Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. South Korea is navigating a complex moment for its economy and markets. Following the impeachment ruling on former President Yoon Suk-yeol, the nation saw a brief dip in the $1 exchange rate and a slight easing of market volatility, reflecting hopes that domestic uncertainty might begin to fade. But that window of calm has been narrow. A fresh wave of global trade tensions sparked by the Trump administration's announcement of 34% reciprocal tariffs on China has reignited concerns across global markets. Beijing has responded with matching tariffs, and the Korean won has now climbed back to above 1460 against the dollar, with some analysts warning of further upside pressure. All of this comes just ahead of a snap presidential election scheduled within 60 days, adding another layer of potential volatility. To help us understand what these overlapping events mean for South Korea's economy, markets, and policy direction, we're joined by Yoon Soo, Professor of Economics at Seogang University, here in the studio with us. Welcome, Professor.
Thank you for having me.
And also joining us online is Min-Ju Kang, Senior Economist at ING. Thank you for joining us.
Thank you for having me.
So let's start a discussion with Professor Lee. So like I've mentioned, President Yoon's impeachment ruling was seen as a potential resolution to one of the biggest recent domestic political uncertainties in the nation. In your view, how has this affected South Korea's economy so far?
Yeah, so the constitutional court's ruling helped reduce some political uncertainty. Right after the decision, markets reacted positively. The Korean won gained some strength, and the Kospi index recovered. I think foreign investors also became a bit more stable. But this effect was only limited. Investors remain very cautious because the country is still in a political transition. I think what's more serious is the growing external challenges you mentioned at the beginning. The U.S. recently imposed 25 tariffs on Korean exports like cars and electronics, and we don't have the former president, and with only the acting president, it is very difficult for Korea to respond through the trade talks or diplomacy. So consumers in Korea, the confidence is very weak. They cut a lot of consumption, and there are also limits to fiscal policy. The tax revenues are below expectation, and political conflict is blocking the proposed supplementary budget. So overall, the ruling brought some relax in the short term, but Korea's economy still faces major risk.
Right, so it only provided some short-term relief. We'll have to see the bigger picture from now. Now, let's also bring in Ms. Kang to the conversation. So looking back at the impeachments of Roh Moo-hyun and Park Geun-hye, what financial market trends typically followed such kind of political events? And in what ways does the current situation differ, especially considering today's global economic environment?
Well, I think the look back at what has happened in the past is not going to tell what happened this time, because economic and political situation is different from the past. Financial market in general are not fond of any uncertainty. So if we just only focus on the fact that, the largest domestic political uncertainty has removed, the market should welcome the news. However, but the thing is that, compared to the past two impeachments, we think that, the political divide is much more deeper. And this is not just a Korea-specific issue, it's more of a global phenomena. And because of this deep division, is a root of protectionism and populism, and thus the division is often create market jitters more easily. So we believe that even if the President Yoon was formally exited, actually the market reaction to it, market rally was very short-lived. This is telling the market that they are going to have more uncertainty ahead. We are going to have a new president in less than 2 months. However, this is going to open another door of uncertainty. And we believe that, this, ongoing uncertainties around this election and the market will kind of be on the more roller coaster ride, heavily depending on how the U.S. trade policy develops.
Right, so the domestic and geopolitical situation is quite different from the past. Now, following the latest ruling, Professor Lee, the $1 exchange rate briefly dipped to 14.30, suggesting momentarily a relief, but it quickly surged back above 14.70 due to global tensions. What does this sharp reversal tell us about the relative impact of domestic political stabilization versus external economic shocks?
So about the importance of whether it is domestic shock is larger or external shock is larger, I concur with Ms. Kang Min-ju that external shock matters in this case. As you briefly mentioned, that the $1 exchange rate rose to around 1,430 after the impeachment ruling, but within a few days, the won weakened again, closing at over 1,480. This shock, this quick reversal highlights how strongly external shocks are driving the Korean market right now. The key reason, obviously, is the U.S. decision to impose new tariffs, 25% to Korean goods like cars and electronics. And South Korea, is a highly export-oriented economy, and the U.S. is one of our most important trade partners. So these measures had a direct and significant impact. And I don't think this is whether domestic or external. In this case, the external shock was simply much larger in scale, and the market focused more on the global trade risk than on domestic stabilization, and especially the case for the won. Won is very risk-sensitive currency, and when there is a global uncertainty, investors tend to sell the Korean or emerging market currencies and move to safe haven assets like the US or Japan. This put additional pressure on the won.
Right, so we can't really weigh in which one is more impactful. Both of them are very sensitive, has sensitive impacts to the market. Now, the 1470 level has been breached, Ms. Kang, with markets eyeing on the psychological threshold of 1500. How do you assess the risk of the Korean won crossing that line, and what short-term triggers should we be paying attention to?
Actually, the global risk, sentiment, market sentiment is easily swayed by the, U.S. Trump's, tariff policy and actually its reaction. Chinese reaction to it. And it's like, the global market is watching on the, standing on the sideline, biting their nails and, watching these two giants fighting each other. It's not entertaining at all. And this is going to be the main trigger factor for, not only just Korean won and also in global FX market. I think, one thing is clear, the Korean won will be more volatile in the near term, given the nature of Korean won's, being a, high beta currency. And we also give a more trading range. It has to be very wide. We believe that between 1425 to 1500 is possible. On the upside, actually, yes, like you said, it is very critical level, 1500. However, the smoothing operation by the FX authorities may slow down the depreciation pace. However, it will not change the direction of the move. And also, we are going to see more of this, trade tension escalating, then probably can trigger, hit the 1500 level. On the downside, actually, it's more capped because thinking about, the negative yield gap between Korea and the U.S. and our large export exposure to the U.S. and uncertainty surrounding, this tariff negotiations, these all factors, probably because of these all factors, the Korean won would not easily go down, to the 1425 level.
Right. So in the meantime, it would be very volatile, and we will have to keep close tabs on how it moves. Now, in response to all of this, Professor Lee, South Korea's top economic policymakers have convened F4 meetings. For those unfamiliar with what happened, could you walk us through the key points of their action plan?
Yeah, so the F4 meeting refers to Finance 4. That's a regularly closed meeting between the top economic and financial officials, including the Deputy Prime Minister, the Bank of Korea Governor, Financial Services Commission Chair, and the head of the FSS, the Financial Supervisory Service. So this is English word is familiar to Korean people because it has a reference to the popular Korean drama Boys Over Flowers. So here F stands for finance, not the flowers. These are all male government officials. So after the U.S. announced 25% tariff on Korean exports, the F4 member quickly met to assess the risk and stabilize the market. And Deputy Prime Minister Choi Sang-mok stated that government is ready to act if volatility increases through liquidity support, FX measures, and other stabilization tools. And the government unveiled a package of more than 2 trillion won, that's about 1.5 billion US dollars in policy financing to industry that are impacted by the recent US tariff imposition. So they also launched a 24-hour joint monitoring system across markets, and in the long term, they prepare for the trade negotiation with the US and industry-specific support, including, and they also have 10 trillion won supplementary budget to handle export shocks and supply chain disruptions. So government is trying to remedy such a in quick response to such a large external shock.
Mm-hmm. Thank you for breaking that down, Professor Lee. It's good to know how the government is trying to work to stabilize the situation. Now to Ms. Kang, as an economic expert, now that we've heard all of this, do you think these measures by the F4 were adequate to restore market confidence, or is there a need for more proactive and sustained steps in the near term?
Yes, well, those measures may help a bit. However, I don't think it is strong enough to restore the market confidence yet. Partially because the biggest risk is not from, it's from the external end, which is out of control of, probably our measures. But at least we should tackle internal, issues like this political gridlock should be resolved. And, these two major parties have not reached an agreement on, supplementary budget for more than 2 months. And, prompt and timely, policy response is very important when this growth condition is softening and weakening. So we believe that, this kind of policy support is actually needed. However, unfortunately, we will have to wait for more sustained and coherent policy support until after this election. And also depends on the election result. The government, policy stance will be very different from what we have now.
Right, so we'll really have to see how the results fall in on the South Korea's upcoming elections. Now, we've been talking about the Trump administration's tariff policies, of course, with reciprocal 34% tariffs already imposed in China and more are being threatened. How do you think this new round of trade conflict would affect South Korea's export-dependent economy?
Actually, Trump paused this, 25% tariff. And, we are going to have more blanket 10% tariff. Korea's total exposure to U.S. import is about 8% of GDP. So with very simple calculation of, applying this 10% tariff, which means that, it will risk about 1% of our GDP. However, the cars and steels are still under, higher tariffs for now. And for now, some semiconductors and farmers are excluded from the tariff. However, this is likely to be included. Then, probably the negative impact should be much larger than, that's an estimated 1% of GDP number. But fortunately now, Korea has a secured seat at the negotiation tables with the U.S. administration. From now on, it's going to more be important how this negotiation will evolves. Probably the Trump administration is like to tackle this issue as a package deal. So they want to deal with not only just tariff issue but also other issues together. So they're going to request more direct investment from South Korea to U.S. and they want more imports of, U.S. goods, including, LNG and agricultural products, and also probably more spending in the U.S. troops in Korea. So this is going to be, have, lots of requests that, but, we are not sure how much of that we can, meet their request. But, I don't know, you have seen this, the message from the White House official, SNS, they said, do not retaliate. You will be rewarded. So hopefully we have a small hope that at the end, the actual tariff will be imposed to Korea is likely to be more relaxed than what we see now.
Let's hope for some leeway on that front. Now, looking ahead, Professor Lee, a snap presidential election, like we've been talking about, will take place in less than 2 months. How much additional uncertainty do you think this would have on South Korea's markets? And what kind of policies would investors be more keen to in terms of the next administration's economic policies?
Okay, the upcoming snap presidential election scheduled for June the 3rd. There is another layer of uncertainty to the Korean economy, unfortunately. While Democratic Party candidate currently appears dominant, public sentiment remains sharply divided. According to the polls, this candidate has about 30% support, but 37% of respondents say that they dislike this person the most. So the combination of low approval and high disapproval reflects the deep polarization in Korea, both in the National Assembly and among the public. So even if the dominant party wins, the presidency and dominant party win the presidency and holds a parliamentary majority, investors are not necessarily expecting smooth policy making. About the next administration's economic policy direction, there's particular concern about whether the next administration will pursue business-friendly policies. Structural reforms such as labor market adjustment or regulatory changes is necessary to boost innovation and productivity. That's very important for the long-term growth. But given the current political climate, there is uncertainty over whether such reforms can pass through the National Assembly. So this kind of uncertainty raises a big risk to the Korean market, whether the new government will come in 2 months of the time.
Right, so election results will definitely add another layer of uncertainty to the situation. Now, considering all of these developments, domestic political shifts, global trade tensions, currency volatility, Ms. Kang, what's your overall outlook for South Korea's economic trajectory in the second half of the year? Are we heading into a more stable phase, or should we be bracing for more turbulence?
It's a really tough question. We market economists make forecasts for a living. However, we do it based on a lot of assumptions and based on logical reasoning and thinking, from all sort of the data we collect. But now, these things can be easily thrown away by just one person. So it's very difficult to predict. However, I try my best to estimate this impact on the Korean economy. We expect the Korean GDP to grow less than 1% this year. We had thought that probably the second quarter would be the bottom assuming that this reciprocal tariff came into effect on April 9th. However, it changed. So maybe there's, 3 months of, leeway. We may see more extent of this front loading of, more, goods will be shipped to the US, at least until for second quarter. However, it's going to be more like a technical, payback. We are expecting in third quarter. And also already just 10% of tariffs already imposed. And also, cars, steel, and aluminums, and farmers, and all these major export items will be included. Then it's going to have more negative impact on Korean export anyway. And also, rising uncertainty will hurt the sentiment of business and consumers, and this will eventually, weaken the global demand of Korean goods. So if we consider these two factors, actually, we believe that, we are going to have a very sluggish growth for the second half of this year. However, one hope that, we have is that, macro policies. We believe that, not just, monetary policy, but also fiscal policy will turn more accommodative to support the growth. And this is coming regardless of the, the election result. However, the thing is that, we have to wait until, for more than, less than the two months to this political vacuum situation get resolved. So this is quite difficult situation for Korea for this year. And actually, we don't know how this tariff negotiation will evolve. So still the downside risk is still quite high.
Right, so a difficult situation ahead, but thank you so much for shedding light on the bright side as well. We will have to wrap up our discussion right here. Thank you so much for your insights, Professor Lee.
Thank you.
And Ms. Kang, of course, we appreciate it. Now, this wraps up our program for tonight. Thank you for being with us in Within the Frame, and be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.